So if you want to quit your 9 to 5, if you want to semi-retire, if you just want more time back, then this is the video for you. What I'm going to share with you is the number one options trading strategy that I use to generate lots of income and a high chance of profit per trade. And if you like the sound of that, all I ask is that you smash that like button and don't forget to subscribe. This is all based on my 111 trading strategy. The link is down below if you want to get the full strategy, which has the tutorial book, the videos, all that good stuff that breaks down the three-legged strategy. What I wanted to do in this video is walk you through a trade I've placed, and you can see it's live, it's moving around within Option Strat, which is a great visualization to show you how you can generate income through this particular strategy. This trade is on a ticker symbol OKLO or OKLO, and it's a volatile stock that has been moving up and down. If we look at its chart on the weekly, you can see here it's had in a 1 week, it's had a 63% move, and current week today it's had a 25% down move. I am doing a trade using the 111 trading strategy. Again, the full details is down below, but it's a three-legged strategy that creates high probability trades. If we break down this trade in terms of its metrics, its goals, you can see how we can generate income or predictable income on a weekly, monthly basis. First thing to look at is the expiration dates. When you trade options, it's all based on expiration cycles. These options expire, whether that is 15 days or 100 days, 200 days, whatever it may be. I tend to trade options between 10 and 60 days out. This is a short-term trade for me, which is 15 days, the 7th of November. I'm shooting this video on October the 23rd, 2025. Now, the next thing to look at then is how we set up our strikes, which again, all the details inside there, a long video for me to walk through that. But you can see here that there's 3 legs here. We've got a leg which we buy and 2 legs that we sell. And what that does is create this permutation here, and I'll break down this graph for you to see visually on what's going on. So the first thing is the net credits. Because I'm primarily an option seller, every time I place a trade, I bring in money into my trading account, which is the maximum I can make in this trade. At the moment, I'm sold 1 contract, and that's looking at $108. The amount of money I've taken into my account is $108. Now, no one can take that money away from me. Even if this trade goes completely wrong, that $108 is what I do. And what I do is I do many OKLO trades, not a figure of speech of I could be doing 10 trades that could bring in $100. That is $1,000 in a month for a 15-day trade. That's how I generate income, through doing multiple options on multiple stocks, where I find the most volatile stocks. And again, the details down below go through how I pick my stocks, what strike prices I go for, and all these good things. The maximum loss is infinite, because OKLO could go to 500 or whatever it is, and you'll see how that works out inside a second. My loss is infinite, and a lot of people get scared by this, because all I'm saying is that my max loss in this example can't be infinite, because I'm betting that OKLO would go down. Even though OKLO has gone up in price all the way up here to a high of 193, it's not going to continue going higher every single day for the rest of its life, or within the next 15 days. That's the bit that you got to look at. And the probabilities, as we'll go into secondly, will show that. The next bit is your maximum profit. I did say to you that the most I can make is my net credit I receive. This is where the beauty of the 111 trading strategy is what it does is the way that these legs are designed on this particular trade, it creates what's called a hedge. And you can see this here, this little bump here that you see here, that if OKLO starts to go up and the move goes against me, because you can see if OKLO goes in this level here, I start losing money here because it's 1500, 1600, 1700, etc. If it goes up and then it starts going up here, you can see here that 330, 350, 344, etc. How I make more money. And this here, what this bit does here, this allows me to move my break even a lot further, because if I didn't have that leg, the break even would stop would stop at the 175. But the difference between these two strikes is what's causing this hedge, which allows to increase my break even by another $2.50 on a $122 stock. And that's how I'm able to potentially make more money. That if Oklo closes within this anywhere from 162 to 170, if it closes anywhere within there, and if it gets to the highest bit between 170 and 175, that's where I can make the full $858 profit. Again, if that sounds complicated, don't worry about it. This video is to show you the overview, that all the details is inside the material down below. And this is why I can get such a high probability of profit. A, because I'm way, 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 way above the current price in this example. So we're trading at, where are we? Oklo's trading at 123.12. I don't need to start worrying about anything until it gets past 170. So if you look at where my break even is at $183, which is 50% or 49% away from the current price. Oklo, even though it has the ability to move 68% inside a week, and you've got to remember, I've got a 15-day option here. So it has to move 49, 50% in the next 15 days, which, based on the current trajectory and momentum of Oklo, even if it does go up, we've got resistance at the top of this bar at the moment, which is sitting at 170. And we've got this pin bar over here, which has a high of 180, I believe, 193.84, which puts me in trouble here if it does get to 193. But I'm pretty confident, or shall I say I'm 94% confident, that it will not get to this point by the date of expiration. And even if it does, or gets anywhere near this situation, I have the ability to start taking profit a lot earlier, which I'll show you in the visual example in a second when we look at it. Got a high break even, high strong probability of profit. I'm guaranteed 108. Potentially I can make 858. And at the moment I'm at break even or 13%, $13 loss, 12% of my 108. But that's fine, because at the end of the day, as long as it stays below this number here, I'm good in the next 14 days. And you can see in the back, we've got the bell curve or the distribution curve. And these black lines here are the standard deviations. You can see here, I'm just outside the second deviations, 2 standard deviations away, which is 95% price action will stay within 2 standard deviations. The likely chance, and as the days go by, we've only got 15 days. And you've got to remember, 2 of those days are Saturday and Sunday. Unless it makes a big move today or tomorrow, which is only up 2%, which is it's not really going to do much for me in terms of against my position. What you can see here is we've got strong things inside our favor. But if I go over to the table view, and what this looks at is it shows you the dates between now and the 7th of November. And you can see here that even if, where are we today? We are at the 23rd. If we go to Monday, let's go a bit further up. Even if I'm 16% down, the price goes up by 16% I can still make money. You can see here that I'm still going to make money as it goes against me. Even if I want to get out of this trade, let's say Oklo moves up, I don't know, on the Wednesday, 31%, which is a big move. I can still make 146, which is more than the initial credit I received, because it's getting into what I call the catchment area zone over here. As it starts to go up, I start making more money. I don't mind it going up. Ideally, I'm happy to pocket $108, which I'm 94% chance that I will at minimum guarantee myself $108, 6% that it could go the other way. But where the market is, the broader market with the tariffs, all that other stuff, etc., is I feel like we're in a good position here at a 94% probability. To recap the video, this is the 111 3-legged trade, of which what I do is find high volatility stocks. You can see here the implied volatility is 127%, which is volatile. I'm able to go far out the money, as it's called in options terms, to find trades where I'm still making a decent amount of return, one contract, not doing any risk. Don't want to start doing 10 contracts and things like that, because if it does go in the 6% chance it does go against me, then I could get into margin calls, etc. So trading quite small with one contract, 94% chance of making a profit. Break even is at 50%. So even if the stock moves 50%, 30%, 40%, etc., I still lose no money. And that is the bit that you take away from this video. And then secondly, if, for example, let's say, if I go back, let's say on the day of expiration, Oklo is trading at 190. So all else being equal with the volatility, I've got a minus $642 loss or unrealized gain, or unrealized loss rather, on the table. What you can do with options, and what's good with the 1-1-1 strategy, is that you can roll the position. And again, I'll do more videos on rolling and how that works. If this position does get into trouble, I will do a live video on me rolling a position. And what rolling is effectively closing out this current trade at a loss of, well, now it's changed to 542, but let's say it's 500 to keep the math simple. I'll close the trade out and take a realized loss of 500. And then I will open simultaneously another 1-1-1 trade on the same stock at more favorable strike conditions. And based on if it does move up 50%, I'll be able to do that for an additional net. Now, again, let's talk about that very quickly, make sure that people understand what I'm doing. I'll close out this position at a $500 loss, or it could be a $1,500, $2,000, $3,000, depending on what happens to Oklo if it goes up 78%. But I will take a loss on that trade. That money that I've lost, I will sell again a brand new option, which will take into account that loss that I've made. And then if that option expires worthless, I will realize the credit, the additional credit I get, plus my loss I made from the first trade. So that is how you can roll options and give yourself more time to be right. And again, you remember, if 6 out of 100 trades in this example are be like that, based on what I can see with current market conditions, etc., I don't think I'm in that category. If I was to place the trade here, for example, where Oklo's gone up by 60 odd %, then there may be more of a chance that Oklo could go up, which it did do here. I'm going against the trend. Well, I'm going with the trend, but my bet is that it's not go above 183.58. So I've just drawn my break even over here so you guys can see that. And then we can look at that inside additional trades going forward on this channel. But effectively, I've got price pan on my side. I've got overbought conditions on my side, and I've got a sell off. I've got momentum now to the downside. So I've got all those things going against me. Plus I've got the price has to go make back all of these losses and then a bit more. And remember, it's in the next 15 days. It can happen. We've seen it here. It's gone up by 63% on this one bar. So it's done 63% gain in a week. But we haven't seen a massive downward candle followed by a massive upward candle again in the space of 15 days. So in my view, it is unlikely that that is going to happen. So that is why I'm quite confident that I'll be able to make that difference back. Now you can see here that my loss here is up to 43% as we're talking. And that is because volatility is either expanded and or the price of Oklo has gone up, which I think is volatility because this was at 2 point something earlier when I was in a positive. So, but I don't look at that. It's unrealized, it's paper losses at the moment. I don't need to worry about it. All I'm worried about is this 122.33. And where is that 123 in relation to my caption area, hook, or the hat, or whatever people have called these inside the past, until it gets into the trap, or rather it's called. So I've still got a long way to go till it gets there. If we work this out, 122, and then the start on my cap is at 162.50, 162.50 minus, let's call it 122, 40.50, 48.5 divided by the current price. Oklo has to go up 33% first for me to start making more money. Sometimes I do want stocks to go up and go into the trap. Sometimes I'll set this trap wide. and take a less credit on the front end in the hopes it does go up, because the quicker it gets in the trap and it stays in there for longer, the more then that option will decay, and therefore I can make more money. But this is a hedge where if Oklo go down 10% tomorrow, I've pretty much made most of my $108, and I might close out the trade on Monday. Just want to be fully transparent with these positions. If you like the sound of this stuff, you can get the 111 trading strategy. In there, we'll show you how to create a demo account so you can try all this on paper money, so it doesn't cost you a penny to do. And once you learn how options move over time, how to select the right strikes, then you'll start be able to making consistent passive income similar to what I'm doing. And I should see you guys in the next video.